Hey everyone, welcome. Have you ever stared at a chart and just felt like you're missing a key piece of the puzzle? Well, then you're going to want to stick around. Today we're driving into a trading philosophy called ICT, or Inner Circle Trader. It's all about showing you what really makes the market tick, and let me tell you, it's probably not what you think.
All right, let's kick things off with the big one. Who is really in the driver's seat of the financial markets? I mean, really think about it. When you see those massive chart-bending moves, who's actually pulling the string?
Well, to find that answer, we've got to peek behind the curtain a little bit. It's time to meet the market's hidden puppeteers.
Okay, so the first thing you have to get your head around is this. The vast majority of those big, significant price moves, it's not caused by us, the individual retail traders. Our volume, all of ours put together, is just a drop in the ocean. It's not enough to make those kinds of waves.
So if it's not us, then who is it, right? Well, this is where we get to meet the big players, the institutions that are collectively known as smart money. These are the real market movers.
And this is where it gets absolutely wild. Just look at this chart for a second. The imbalance is insane. That tiny little sliver, 3%, that's us, the retail crowd. The other 97%, that's all smart money. It's just a completely different league.
And to really put that percentage into perspective, let's just think about the Forex market for a second. We're talking about 6.6 times trillion dollars every single day. That 3% we're in, it's barely a crumb of that massive pie.
So who are these giants? Who makes up that 97%? Look, we're not talking about some guy trading from his basement. We're talking about the heavy hitters, central banks, massive institutions like Goldman Sachs and BlackRock, and all the major private banks. These are the guys with enough cash to literally move the market.
Okay, so let's nail down this term, smart money. And here's the kicker. Here's why this is so important. They're not just playing the game, they are the game. Their volume is so huge, they're the ones calling the shots, deciding where the price is going to go. So our job? It's simple. We learn to follow their lead.
All right, so we know who's in charge. Now, let's get down to the nitty-gritty. How do we actually see this stuff on our charts? Let's take a look.
It's actually easier than you think. You can see their fingerprints just by looking at how price is moving. On one side, you've got that choppy, sideways mess, right? It's indecisive. That's usually just us, the retail traders, kind of fighting it out, going nowhere. But then, bam, you see these huge, powerful, impulsive moves. Those big, decisive candles. That's a giant institutional order hitting the market. That's their signature.
And that really brings us to the whole point of this approach. Our goal isn't to get beat up in that choppy noise. It's about spotting those big waves, the footprints of the giants, and learning how to surf them.
Okay, so smart money has basically two ways of moving the market. First, there are the manual moves. We're talking about those massive orders, a lot of times dropped right around big news events. And then there's the automated side. I mean, think about it. The market runs 24/5. How does that even work?
Well, that's where something called IPDA comes in. It stands for the Interbank Price Delivery Algorithm. You can pretty much think of it as the ghost in the machine, the market's hidden engine. It's this super complex system that's constantly looking for liquidity and balancing the books to make sure price keeps ticking over perfectly, all day, every day.
So, you've got these huge institutions making manual moves and this complex algorithm running in the background. How on earth are we supposed to keep track of all that? Well, the answer is actually pretty elegant. It comes down to using a simple but really powerful three-part compass. Now let's be super clear about something. This is not about getting some kind of secret insider info. We're never going to know exactly what they're holding. That's illegal, right? But the cool thing is, we don't need to. We just have to learn how to read the clues, the footprints they leave behind for everyone to see.
And this right here, this is the heart of the whole thing. It's like a three-part system. First up, there's price. What are the candles actually doing? What's the story they're telling us? That's the what. Second, we've got time. The market is not random. Big moves are often engineered to happen at specific times of the day. That's the when. And third, we use intermarket analysis to confirm everything. So, for example, if we think the dollar is about to go up, we'd look at something like gold to see if it's doing the opposite like we'd expect. So you've got price, time, and that final confirmation.
Okay, let's pull all these threads together, because understanding all this is not just about learning a new indicator or a new pattern. It's a complete mindset shift. You stop fighting the market and you start trading with the very giants that move it.
So if there's one thing to remember, it's this. When those three things, price, time, and that intermarket confirmation, when they all line up and point in the same direction, That's it. That is the smart money footprint. And that's where you'll find the really high probability opportunities.
So I guess the question I want to leave you with is a simple one. When you pull up a chart, what are you doing? Are you just guessing? Are you hoping for the best? Are you relying on some pattern you memorized? Or are you actually learning to read the story the market is telling you and following the footprints of the very institutions that are writing that story?